Let's be honest, retirement planning can sound like alphabet soup. 401k, IRA, Roth, pension. It's enough to make anyone's eyes glaze over. But here's the truth. Retirement accounts aren't just numbers on a page or something you deal with at the end of your career. They're tools, powerful ones, that can give you more freedom today and help shape your legacy later. So let's strip away the jargon and talk about what these things actually mean. A retirement account is simply a bucket for money you set aside to use later in life. You can put money in while you're working. It grows over time, usually with some tax advantages, and then you use it to support yourself when you stop working. Most people have one of a few kinds. A 401k or 403b comes through your job. You put in a portion of your paycheck before taxes, and sometimes your employer matches part of it. Free money that grows for your future. A traditional IRA is one you typically open yourself. The money you put in may be tax deductible now, and you'll pay taxes later when you take it out in retirement. A Roth IRA, on the other hand, flips that around. You pay taxes now, but then your withdrawals later are tax-free. And a pension is a little different. It's more like a promise. Your employer agrees to pay you a steady income for life after you retire. Fewer people have pensions today, but if you do, it's an incredible benefit. Now, here's where people often feel unsure. Which one is better? The answer is, it depends on your situation and goals. But you don't have to choose just one. Many people have a mix of these, and together, they create a strong foundation for financial freedom. Think of it like a garden. Each plant serves a different purpose, and together they provide various benefits. The beauty comes from balance. So how do these fit into your estate plan? Well, first, these accounts are meant to take care of you. They're your safety net, your independence, your ability to retire with dignity and choice. But after you're gone, whatever's left can also care for others. Here's something interesting. Retirement accounts pass directly to the people you name on a beneficiary form. That means they usually skip probate entirely, which can make life easier for your loved ones later. That's why it's worth taking a few minutes to look at those beneficiary names. Do they still reflect your wishes? Have there been life changes, like a new marriage, divorce, or a new child, that might make you want to update them? If so, that's a simple fix, and one of the easiest ways to keep your estate plan up to date without redoing everything. Now let's zoom out for a moment. How do you use these accounts during your lifetime in a way that also supports your legacy goals? Some people choose to draw from certain accounts first, depending on tax treatment. For example, leaving a Roth IRA to loved ones can be more beneficial than leaving a traditional IRA because Roth money can often be withdrawn tax-free. Meanwhile, if you plan to make charitable gifts, some advisors suggest leaving traditional retirement accounts to charity, since charities don't pay income tax, meaning more of that money goes directly to the cause you love. You don't have to know all the details now. What matters is understanding that the type of account you use and how you use it can shape both your retirement and your legacy. And here's the part most people don't realize. Planning for retirement and estate planning aren't separate things. They're two sides of the same coin. When you organize your accounts and keep your beneficiaries current, you're already taking key estate planning steps. You don't need to know all the tax rules or investment details. That's what financial professionals are for. Your job is to know what you have, what it's for, and who you want it to benefit, both now and later. So, let's make this practical. You now understand what retirement accounts are, why they matter, and how they fit into both your life now and your plans later. You could explain the difference between a 401k, an IRA, and a Roth to someone else, and that confidence matters. If you want to take a small step right now, grab a piece of paper, open a note on your phone, or open your MyEstateKit app and record just 4 things for each retirement account you have. The type of account, where it's held, the approximate balance, and who the current beneficiary is. Best guesses are more than enough for now. This simple list starts turning scattered information into something organized and usable. And if you're ready to go a little deeper, there are optional tools that can help. You might review the actual beneficiary forms on your accounts and see whether they still reflect your wishes today. You could also look at how different types of retirement accounts may fit into bigger picture goals. You've worked hard to earn and save this money. Taking a few minutes to understand where it lives and who it's meant to support helps ensure that effort continues to serve your life and the people and purposes that matter to you. So whether you stop here, write a short list, or explore a little further, you've moved forward. And that's exactly how good planning happens. One clear, manageable step at a time.